weather issues in South America creating delays for the second corn crop and the market reaction in Chicago. Mike Zuzolo is ready to comment on that right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Mike, how are you today? So, we are having some issues with the weather in South America, especially in Brazil, where we might have some problems for the safrinha, also known as the second corn crop.
Yeah, you had done a weather and crop update for me and really appreciated that, Luis, and also had looked at some of the information that I also get from other sources. And as that was being looked at, the ag attaché out of Brazil from USDA FAS came out and did kind of a surprise in that not only did they cut the production by 2 million metric tons for Brazil's 23-24 crop and took it down to 122. But what I thought was especially noteworthy was they cut the exports by 7 million metric tons for the marketing year. And that takes us down about 9.3 million tons for Brazil's exports versus last year. And what I found very remarkable in light of the bullish corn acreage numbers, the very strong export inspections when we came back from the Easter holiday, and that attaché report is the market has been able, as of Tuesday's close, to take out the lows from before the crop report of last Friday. And I think this signals very clearly to me that we are not trading South American weather fundamentals at this point. We're not pricing in the problems in Brazil. So the safrinha corn crop, I don't know if you want to add anything to what I've just said, but I thought your report was very, very good.
Well, I would like to know when you expect the market to react on South America. Maybe the market is delayed on the reaction because this information is quite new.
Well, I think it could be that, but I'm inclined to think that there's three other factors that are out there that have been kind of superseding and overshadowing the Brazilian weather issues and production potential problems that we could be seeing here in the near future. And the South American weather is still very much an issue in terms of lower production and tighter world supplies. I think the first thing would be that the trade is looking towards U.S. planting of corn and that coming in very, very quickly. I have talked to some clients in the Western Corn Belt. Just talked to a client about an hour ago before we started taping this that they're going to start running corn this weekend. Clients seeing bean planters rolling in southeast Nebraska, bean planters rolling as of the end of last weekend, potentially in southern Illinois. So I think the U.S. planting is a higher and more elevated right now at this point. But I got to also think that it's something more significant than that, especially given that on Tuesday's trade, we saw the wheat market lead the market overall prices lower, with hard red wheat and soft red wheat both down about 2 percentage points versus their closes on Monday. And I think that goes back to that HPAI, that avian influenza that is now in dairy cattle herds in several states at this point, as reported by USDA's APHIS. And also a major poultry producer has been calling, it sounds like tens of thousands of birds in Texas at this point. And I think the trade is getting very nervous about lost feed grain consumption through the livestock feed sector. And I think that's probably what has really overshadowed the South American weather at this point in time. And so we really have to pull things together, in my opinion, because we're dangerously close to finding a breakdown to lower levels at this stage of the game.
Yes, and in Argentina, there is a very significant delay on the soybean harvest, and corn is not very different from.
No, and so, I always like to talk about the funds versus the fundamentals. I think we're in one of those markets. I think we saw that in the cattle market when we heard about the avian influenza. The trade is under the impression that the end user, the consumer, both domestically and major importers, maybe in Asia, will pull back on importing US beef because of this avian flu. And I think the big issue here is 10 to 20% of our slaughter of beef in domestic slaughter mix comes from the dairy side of the equation. And it's probably closer to 10% because we've culled a lot of the cows and heifers out of the slaughter mix here over the last 18 months or so, but it's still a sizable amount, 10% of our supplies that are slaughtered for beef consumption domestically is a large number to have to contend with. And so the trade, I think, is worried about that. And that's why they took the April feeder cattle futures, for instance, Louise, they made a $10 move in one day when it came to Monday's trade. It was making new highs. The news broke about the avian influenza at a dairy herd, and all of a sudden we were down $10. I take a different approach, and I'm hoping USDA and APHIS follows in this line of thinking that the beef food supply is safe, and that if there is a dairy herd that has avian influenza, that cow will never reach the slaughter meat packing plant and enter our beef supply chain. And I think the USDA is probably working on that, but they need to get something out very, very quickly to acknowledge that, I think, for the good of the whole market. But in between this time period, we've got the funds trading headline news started in livestock, and I think it's moving into the grain sector here, and it could be doing some technical damage if we would take out some recent lows, like in the feeder cattle, that 239 level in April feeders, in the fat cattle, that 179.75 area that was the low from yesterday in April. That's a big number to me too, as well. And same with the wheat market, that 540 level in hard red wheat is a big number that I really don't want to take out.
Now, how do you think that the energy markets are impacting the agricultural commodities, especially crude oil going higher recently?
Yeah, I think that's a really great follow-up question, because not only do we have crude oil making new 2024 highs because of geopolitics, and we have a limited supply on pretty decent demand, we've also seen the copper market rally as well. So I don't think this is not about China. It's not about deflation. It's not about global fears about the commodity sector like we had back during the holidays and as we came into the new year of 2024. That's why I think it looks a bit different. It looks different from a standpoint of what's leading the market lower and what's stronger. And the commodities as a whole were being talked about this afternoon as part of the reason why the inflation is still sticky, and that then could in turn keep the Federal Reserve from cutting rates. That in turn was part of the reason why the Wall Street markets took some profit today. So those all look in sync with one another and they make sense. But when it comes to what happened in the grains today and the livestock yesterday, especially with the crop conditions now out, the planting progress numbers now out from USDA, I just don't see much out there other than this HPAI avian influenza that's really kind of causing havoc in these prices.
Yes, and that is headed to a long-term problem that the U.S. livestock sector has had over the last few years.
Yeah, and I think you bring up an interesting point, because I was thinking about it today. I have no way of knowing this, but if the United States dairy herd has avian influenza, why wouldn't the Brazilian herd, or why wouldn't, the Australian herd? I think we probably have the best sanitary and phytosanitary conditions in the world right now, I would guess, here in the United States. And so why wouldn't this be a disease that's pervasive and kind of worldwide and in other areas? But the market's not looking at that right now. So I think I take your point very, very well. And I'm telling clients and subscribers right now, and please realize the risk in commodities when I talk about what I'm talking about with clients and subscribers. It's not for everybody to trade commodities, but it's, I think, very important to realize that these funds today trade momentum and they trade sentiment very, very strongly. They are the big fish in the smaller pond nowadays, so to speak. And I just want to remind everybody, remember what crude oil did during the pandemic. It went negative in price on the futures exchange. And so we can go negative in these markets if things start to unravel in a dramatic historic fashion. And while I'm not predicting that, I think getting floors underneath us by the end of this week may be something I have to do if this ship doesn't get righted, so to speak.
And what's the best marketing strategy at this point?
Yeah, I would say based upon what we've talked about in South America and Mato Grosso do Sul, especially these major safrinha corn areas that are getting hurt in production potential, I would stick with the soybeans because we're now what it's 75+% harvested in Brazil soy. Argentina is still a question mark, but I think again, Argentine corn is more of a question mark than soybeans. So I am sticking with getting soybean hedges in place first, and then I'll move over to the corn and the wheat. But I'll do soybeans first, cattle and feeder cattle second and third because of the profitability still there in those markets and the relatively elevated prices in the soy and the cattle markets.
And what the market is going to be priced in the next week or next 2 weeks?
Yeah, I mean, I really think that we have to go back to the fundamentals of the supply demand. And if the dollar does not keep charging higher on these increasing bond yields and pulling money out of the riskier assets, I think we started a trend shift in the grains into a more friendly market low after the acreage report. And I will say in the acreage numbers, I don't have a problem with the principal acres being down as much as they are. They're within the 5-year average. We did 310 million acres 2 years ago, the principal crops here in the United States. And so USDA's 313 number from Friday does not bother me. I don't, while I think acres base could go up, I don't think it's way out of whack. So everything that I look at right now would suggest to me, Luis, that we should be putting a low in place. And like 2015, like 2021 and like 2014, April was a pretty decent month in December corn and November beans during those time periods. And while every year is different, I was looking for a much better April than what we're starting out at this point.
All right. Thank you very much, Mike. We'll see you next time.
Thank you, Luis. Appreciate it.